Good morning, everybody. Welcome to the Morning Blast. The sun has got his hat on here. I join myself and Mr. Michael Brown for a very candid takedown on markets, take us, you find us, etc., etc. I hope you put a bit of value into your day, a smile on your face. Nothing we say here is financial or investment, trading, whatever you want to call it, advice. Do your own due diligence. Warnings regarding explicit language, etc., hold true as usual. Yeah, let's crack on. Michael, how are you?
Well, a very good morning to you, Ryan. Good morning, everyone. Very happy Thursday. We are almost at the end of the trading week. And more importantly than that, happy Pony AI earnings day.
Oh, what a blast.
We haven't heard from them for a while.
You know what? I feel almost like, we were talking just before the show, in fact, what the fuck are we going to talk about? And we said about how markets in the scheme of things, or relatively speaking, seems to be getting back to a little bit of normality. And what's more normal than us chatting about Pony AI?
Indeed. I still think that, firstly, we should be hired as some sort of marketing consultant for them. But more importantly, they need a rebrand. They really do.
Yeah. We have said this from day one. So if you are listening, Pony AI people, firstly, where's our equity slice? And two,
backdated to the price it was last April, please.
When we first brought them up,
Yes.
For any new listeners wondering what the fuck are they talking about? Pony AI is the darling company of the Morning Blast. Don't ask why. We're not really too sure ourselves, apart from the fact that pony means shit in London slang. So, there we go. But anyway, let's crack on.
Slightly more serious matters.
No, I say slightly more serious. We're about to do an update from Clive Lambert, so not that serious.
This is true.
But anyway, update from what markets were up to and levels to watch from our dear, dear friend Clive Lambert over at Futures Techs. Hello, Clive. Hello, Clive's bird. Anyway, yesterday, relatively quiet around the traps yesterday. S&P posted a doji, which, as we know, is basically a candle shaped like Ryan. Small body, long wick. Just shy of 6,675. That's the level the bulls need to cheer to encourage further upside. The DAX also posted a doji and is weaker overnight, still shy of the resistance at 23,350. FTSE futures are back above the 10,000 level, but haven't taken out 10,152. That's the Fibonacci level we're watching right now. Again, remember, they're not door numbers. So if you're listening to this back in an hour or two on the podcast players and it's above that, don't get your knickers in a twist, because quite frankly, I don't give a shit. Bund futures showed some bullish promise earlier in the week, but that faded yesterday and they're offered overnight and this morning. Eurodollar and cable both set a weaker tone. Cable failing again on a retest of its 200-day moving average. Dollar yen is still hanging around its recent high at 159.90. Gold, the yellow metal, and silver have set a weaker tone in the last 24 hours. Silver failed just shy of resistance at $75 yesterday. It's been down to 69.08 overnight. LME copper filled yesterday's gap with weakness this morning, but is still north of the 12,075 level, which is, I'm grateful for that. Another Fibonacci level that's worth watching. Oil benchmark saw green yesterday and overnight, but Brent crude is eyeing $100 level once more. This is on the new front month, of course. WTI is above 91.32 this morning. We'll see if that can be sustained. TTF natural gas, the European benchmark gas, gapped lower on the open yesterday, but recovered, and its bid this morning still shy of the 57.19 and 58.24. So still erring on the bearish side on that one. We need it above that for the bulls to really take control again. EU carbon sold off from the 73.16 down to 68.51 yesterday, but recovered into the close to post a doji. 74.74 to 84 is a resistance, retrace target being highlighted right now. And in the grains, and the grains were all green yesterday. Soybeans have strong support at 11.62 to 11.64, with resistance at 11.84, and then 12.38.5 for you grain watchers, soybeans in particular. But that's it from Clive. Thank you very much, Clive. Hello.
Yes, I'm still here. Yes, don't worry, I haven't gone anywhere.
Oh, normally you chime in straight away and go, yes, thank you, Ryan. Thank you, Clive.
No. I was actually slightly distracted because I'm in a meeting room with a whiteboard on it that's got a lot of scribblings on there, and I was trying to determine what they all meant because they're in my handwriting and I can't read it anymore.
Is there any penises?
No, it's actually about bond math of all things.
God. God, do you know what? Do you know what? How the game has changed since my day being in the trading floor office?
I was going to say it's not interesting.
In my day, it would be like it'd be a list of the names of the girls who work in the firms, ratings out of 10, couple of couple of penis drawings, and just random quote books. But yes, anyway, right. Where are we doing? So I suppose
we may as well start in the Middle East. Thank you, Ryan. Thank you, Clive. As always,
day 27 of the Thunderdome.
It is indeed, yeah. And I mean, arguably, we're not really any further forward than we were this time yesterday, to be completely honest with you. Again, plenty of headlines, plenty of news flow throughout the day yesterday, kind of equal parts escalatory or negative, and de-escalatory or positive. And actually, markets were a bit indecisive amongst all of it, as Clive's update there just alluded to rather well.
To be honest, you can we can make a case for, nothing being done is probably the best thing to do, because, as we've seen, doesn't matter how bad things are looking. If you're just looking at purely a standpoint from a markets, from a trading standpoint, I think it's very crucial that we do differentiate kind of outlook on the Middle East from a humanitarian and just a general citizen viewpoint, and as a trader, right? And what we try and do on the show is kind of, as part of the show, it's we are focused on the market's reactions.
Yeah.
And as a market participant, no matter how bad things are starting to look, or if they start deteriorating, you have got that little Trump on your shoulder whispering in your ear, I'm about to do a tweet that might send this roughly 5% higher.
This is it. And, I actually asked a sort of rhetorical question in my note, I think it was yesterday morning. Are we in a case where no news is good news? And I've kind of concluded not yet. But actually, 24 hours on, I think it is increasingly the case that is kind of the way that markets are looking at things. And, I put out a chart this morning, and you stole that chart and put it out yourself, which is basically, if you look at the last basically March since conflict broke out, what the market has done is we've generally, if you look at equity futures, we've generally rallied on a Monday and then just kind of slowly but steadily ground lower as the week has worn on. This week, we've rallied on the Monday on the back of President Trump postponing those strikes on Iranian power infrastructure. And then we just kind of gone nowhere. We've been in like a 50, 60 point range on the S&P for 3 days now. So I think it is increasingly the case that market participants are not necessarily becoming desensitized to what's going on, but as you sort of alluded to, there's almost this, I guess you could call it a Trump put, for want of a better word, where there's kind of this belief that the main signal we've had over the last 4 days is the US want talks, they want an off-ramp, they want to try and de-escalate, at least at face value from what we're hearing, and that's giving participants not necessarily confidence to up risk levels again, but some degree of confidence that they don't need to trim risk levels much more than they already have done.
Yeah, do you know what? I think that is no surprise there, because we're both excellent, but I think we've absolutely
we may as well leave it there. But we've almost peaked too soon.
Oh, I see what you did there. Yeah, very much. Yeah, we've almost PIQ'd there too soon.
Very good.
But yeah, I think you're exactly right. Yeah, and again, people are getting tired of this, right? People, it's like it or not, like unless you're getting unless you're getting considerably worse headlines, market does desensitize quickly. And we've seen this on many factors, on many kind of issues that impact markets over the years. Just kind of a little bit.
Sorry, I was going to say the other thing, just to bear in mind with this is, and again, we're looking at this from a market perspective, right? We all know that conflict is continuing. There are still strikes taking place. There is still kinetic action going on in the Middle East. We all know that the Strait of Hormuz is still blocked, and or essentially blocked, and there are, tightness is increasingly coming through in the commodity market. We're not trying to say or claim that none of that is happening.
No.
What we are saying is that markets are just not necessarily focused on that at this moment in time.
Yeah,
and that focus could change, and it probably will change at some point. But right now, that's not the case.
No, exactly that. It only takes one headline for all the attention to be back on this.
Absolutely. And again, if you're listening to this in an hour's time, we could be in a very different situation.
Yeah, please don't think we're saying that no one cares about the war anymore, because that is not what we're saying. And again, there's a lot of nuance in everything that you talk about with markets, and especially at times like this. One thing I will say is that it seemed to be from the people I was picking up on from social media yesterday and whatnot. So it was a very busy day for me yesterday, and I wasn't on social media very much, which is lovely. But it does appear that more ships are starting to transit the strait.
Yes.
Which, something to keep an eye on. Again, all bets could be off by the time you listen to this, so apologies for that. Obviously, Iran formally rejected the US 15-point ceasefire plan and put forward 5 conditions of their own, but it's basically just what a waste of time, of everyone's time this is, because it's including sovereignty over the whole of the Strait of Hormuz and war repatriations. And now that's just not going to happen.
No, although the one thing I would say with that, and I do completely agree with you, and actually, we said yesterday there's no point reading out the US's 15-point plan. There's no point reading out the Iranian 5-point plan either. But it does kind of, all of the state media stuff, which is going, we're not talking to anyone and we're not involved in any negotiations. Well, if that was the case, why are you issuing this 5-point plan? There's clearly something going on somewhere.
Well, this is again, we need to be very mindful and just remember that there are multiple heads to the Iranian snake right now. So what one part is saying is often, and it's always been the case, but even more so now when there's a load of new heads, they're like, who are we actually talking to? But so, like I said, it's definitely not something we're ignoring. So don't think that we're saying that at all. That is definitely the last thing we're suggesting. But it does appear that markets are, for the first time in 27 days or whatever, markets are starting to look around the world and let's see what else is going on.
Yeah, and there are still risks, absolutely. As you say, we're not trying to diminish that in any way, shape, or form. Of course, the energy impact is still yet to be known, and how long it takes for that to get back to some degree of normality. There's also this 5-day deadline, which expires, well, I'm presuming close of play tomorrow. We don't have a sort of exact time on that one. There's also the whole thing, and I'm sure we'll cover this more tomorrow, around, is anyone really going to want to be running risk over the weekend? Probably not, given how uncertain the environment is. All we're saying is that we seem to be in an environment now where participants are not so blinkered in terms of what they were looking at, which was everything is Middle East related, and actually starting to focus on, some of the other narratives that are bubbling away, or even starting to try and kind of game out how this may end. How do you trade a conclusion to this, et cetera, et cetera.
Yeah, no, exactly that. And I think another thing, just kind of moving on from actual kinetic action, which is a nice word, that's going, a nice phrase, sorry, is we're starting to see very slowly, and it's always happened slowly at first and all at once, is we're starting to see these secondary effects into supply chains, particularly in some plastics, areas of plastics and whatnot. People are starting to realize that they are about to run out. Very anecdotal, but our good, very, very dear friend Polemic Payne on Twitter noted, was it yesterday, that there's basically in the UK, at least, there's like a national shortage of some like this type of roofing insulation for which construction relies on to meet their kind of efficiency targets. Apparently, it's all made from kind of polyurethane and all this stuff, and they're basically run out. I also saw the UK government yesterday announced that they're going to spend £100 million to kind of spin up a mothballed carbon dioxide plant because, byproduct of, using oil and gas and whatnot, and we just haven't got our own way of producing it, and it's used for carbonated drinks amongst other things, and they're spinning up that plant. So we are starting to see these supply chain issues and shortages kind of materialize. And I do think, like I said, I can't remember if it was yesterday, the day before, my view is, I think this view I share with many, is even if the Strait was opened tomorrow and everything was fine tomorrow, one, it's going to take a long time for oil and gas to come back online to where it was pre-conflict levels. But more than that, all these products, which if you look around yourself, like Dr. Anis was saying on a podcast a couple of days ago, you look around yourself, pretty much everything you're looking at in some shape or form relies somewhere on gas liquids and that kind of, those kind of, plastics and whatnot. And we are going to, a lot of that is related to what comes through the Middle East and what comes from the Strait of Hormuz. So I really do think that we're going to start seeing a lot of supply chain bottlenecks start closing in over the next few weeks. And I think we're going to see more of the same. And what will be really confusing for a number of people is when the Strait is opened, we still have that lag of the next, the following 6 months, we still have these shortages where it takes everyone a long time. You remember COVID, we had this severe, almost kind of catastrophic supply chain issues just because lockdowns were kind of, turned off and we were all allowed to go back out to work and whatnot and go down the pub. Didn't mean the supply chains immediately solved themselves.
Yeah.
So again, there's going to be a lot of lag on this, in my opinion. So anyone expecting that, no matter what happens on the negotiation table has an instant reaction to the real world, I think you're going to be in for disappointment.
Yeah, and I was actually having this conversation with Lynch yesterday, blew me now, and basically saying that you can almost envisage a scenario that whenever, because it will happen at some point, you'd expect we get a headline along the lines of ceasefire agreed or truce or talks happening or whatever. You're going to see the market, an equity market, of course, just rip. Whether it be 5%, 10%, whatever it might be. And then you'll probably have a little bit of a period where actually you see a degree of consolidation. And I think, again, this is probably the last point we'll make on this morning, but I think this is where a lot of people are probably getting things a little bit wrong in terms of going, there is potentially a lot of issues coming down the track for the global economy. And I don't dispute that. However, can you really sit there and go, right, I am going to take a short position in equities based on a bearish view of growth 6 months out? Absolutely not, because the second you get a conflict resolved headline, you're 5% offside. So I think a lot of people are probably in the mindset of actually, we know these issues are coming down the track, but actually the risk reward is going to look a lot better to position for that once the risk of kinetic action and conflict is out of the way than it does right now.
Yeah, no, I could not agree more.
And I wonder whether that's another factor that's kind of underpinning things a little bit, as we kind of alluded to start the show. The other, sorry, I know I said that was the last thing I was going to say. I'm going to say one more thing, which is actually about trade, which is that the White House confirmed yesterday that President Trump's summit with Chinese President Xi, of course, that was due to take place, well, over this weekend, I think it was originally. That's now been rescheduled for May the 14th and May the 15th. Now, the reason I bring this up is because, and again, nothing is guaranteed here, but it does suggest some sort of a belief that the war would be over by then, because, of course, the reason Trump postponed it in the first place was to stay in Washington, D.C. to deal with the conflict. So again, just another kind of sign to keep in mind that, they are looking at some sort of end game here.
Yeah, no, absolutely, absolutely. Well, stepping away from the Middle East, if we can, dragging ourselves, kicking and screaming from the Middle East. What else have we got to be keeping an eye on?
Yes, indeed. So we'll do the day ahead. Of course, the most important event is those earnings from Pony AI, which we started the show with.
I mean, if they're not top of your watch list, what the fuck are you doing listening to us? We don't want you, quite frankly.
Exactly. And there's absolutely no excuse for not knowing the ticker, because it is the name, Pony.
Pony.
Pony. Sort it out.
I hear if they, hopefully, if they take our advice and they do decide to list in London as well, and it's going to be, ticker is going to be hashtag SHIT.
Very good. So yes, of course, participants will watch that. We'll see whether the stock.
You did. Ponies will watch that. Didn't you?
I did, yeah. But we'll see. We'll see whether the stock gallops higher or whether it falls at the first fence. But only time will tell on that front. In terms of other bits and bobs to keep an eye on today, at the top of the hour in 11 minutes' time, we've got a policy decision from the Norges Bank. They're set to hold rates steady at 4%, likely doing what everyone else is doing, which is just taking a wait-and-see approach amid ongoing geopolitical tensions. The only notable data point today comes from the United States at 12:30, which is the weekly jobless claims stats. Do note that the continuing claims print, which is expected at 1.85 million, unchanged from the prior, that does coincide with the March non-farm payrolls survey week. We do, just for the avoidance for a bit of clarity, we do get that March non-farm payrolls number next Friday. Yes, it is Easter. Yes, it is Good Friday, but the BLS have decided to release the jobs report anyway. Send your complaints to them, not me.
Well, just another reason to focus on ADP.
Oh, God.
I mean, this list of reasons to focus on ADP just grows by the day.
Moving swiftly on from that, we also have the last of this week's Treasury auctions, a 7-year note auction at 5 o'clock this evening. The 2-year auction was grim on Tuesday. The 5-year auction yesterday was also pretty ugly, with the biggest tail since October of 2024. So the 7-year is not looking too healthy later on. And we do have plenty of central bank speakers on the docket as well, including the BOE's Taylor, Green and Breeden, and the Fed's Cook, Jefferson, Barr, and Ryan's best mate, Stephen Myron. But of course,
top fella.
But geopolitical headlines likely to dominate amongst all of that. And that is all from me this morning.
Well, can I pose a question to you?
Oh, go on.
It's obviously, it's funny enough to bring up Steve Myron. It's regarding the Fed. So, a lot of, and also we've got 10 minutes to kill, a lot of focus has obviously, as we know, been on the Middle East, and very, it feels to me, maybe I'm just in this little kind of echo chamber and I'm not hearing it, but all this kind of Powell nonsense seems to be being died down, really, right? Well, at least it's not in it's not in the market's kind of front and center vision. But we can't forget that this is still ticking over and stuff. So so where are we? What is the state of play with all of that in terms of power?
Well, so actually, it's funny you bring this up because there was a ruling in one of the district courts in the United States last week. I think it was Thursday or Friday, that basically said the DOJ's subpoenas that they issued, of course, which were the root of all of this. The ruling essentially said that the DOJ have absolutely no evidence, and this subpoena is not worth the paper that they're written on. Now, what should have happened here, in my view, is that the Trump administration should have just turned around and gone, do you know what? We will just take that, park that, we'll forget we ever tried it, get Kevin Walsh confirmed, get him in the job done.
Well, that would be the obvious and simple way of going about things.
Which is obviously not what they've done.
Obviously not what they've
done. So what has happened instead is that the DC district attorney has decided that this, went on a very rambling press conference, railing against courts and all the rest of it, saying that this is an outrage, and they are therefore appealing that decision. So this leaves things in an absolute mess, to be completely honest with you, because we've got a situation now where the DOJ are technically continuing to investigate Fed Chair Powell. Powell said at the press conference last week that he will remain as a Fed governor until that DOJ investigation is complete. He also said at that press conference last week that he will remain as what will be called Chair Pro Tem, essentially continuing in the role until Kevin Walsh is confirmed. Now, of course, Kevin Walsh's confirmation should be relatively straightforward, but it's not going to be because Republican Senator Tom Tillis has said, and I think he's fair enough in this view, that he is not going to advance Kevin Walsh's nomination out of the Senate Banking Committee until that DOJ investigation concludes. So, again, it all rests on the Department of Justice. There doesn't seem to be any sign that that investigation is going away in the near future. I find this one very, very perplexing indeed, because as we just kind of said, the Trump administration were handed an easy out, to get out of jail free card with all this one. It's clear that they don't want Jay Powell hanging around.
Yeah.
And the way that this situation could end up is that, if Kevin Walsh is not confirmed by the middle of June, then Jay Powell is going to be Federal Reserve Chair for the June FOMC meeting.
Which would be absolutely glorious. But do you know what? If I was Walsh,
I wouldn't want the job right now.
Well, no, this is. Oh, I'm glad you said that. You took the words out of my mouth, because I was about to fumble around like a kid in a school disco with his first.
It does play into his favour, to be fair.
Because, quite frankly, June wouldn't be a good one. Wouldn't be a bad one to miss as your first one. Because hopefully, we got to try and stay optimistic. Hopefully, what's going on in the Middle East has subsided. We've got a better idea of obviously how long it's been going on for, how long it went on for. Therefore, we can kind of infer some inflation metrics and stuff, and how things are going to materialize that way. Because obviously, things do like the lag factor. Would you really want the June meeting to be your first?
No. But this whole thing is causing a massive logjam, because we are still waiting for Kevin Walsh to have his confirmation hearing. I mean, we're in a situation which I'm not going to say it's unprecedented, but it's weird, because we've got a guy who's about to take over as Fed chair, and he hasn't made any public comments on monetary policy for at least 12 months.
I liken it to when I see you talking to a bird in the bar. It's not unprecedented, but it's weird.
It's unusual. Unless she's the barmaid.
Yeah, quite. And she's saying, are you going to pay me? The barmaid.
Yeah, so that's the first thing. We don't know what Kevin Walsh thinks. Yeah. We're kind of assuming that he's going to be very, very dovish, but the only reason we're assuming that is because he's been appointed by President Trump. That's not a given.
No.
The other thing that's being held up is the Humphrey Hawkins testimony, and that is when the Fed chair goes to Capitol Hill twice a year, does a day of testimony to the House, does a day of testimony to the Senate, and basically again just kind of outlines their views on what's going on and reports to Congress about the economy. Well, that hasn't happened either. Yeah. Usually that would happen in February. We're now at the end of March and we still don't have a date for it. So, again, it's being lost, as you said, because everyone's focused on what's going on in the Middle East, et cetera, et cetera, et cetera. But all of the kind of usual things that would happen surrounding the Fed are just not happening right now because this DOJ investigation is still going on. And let's be honest, it's a bloody futile investigation in the first place.
Exactly that. Well, I'm glad I asked you and got your opinion because I think we've got a bit of value out of that. But also, one thing just to flag as well is, that old cliche, time kills deals. So it almost feels to me that the longer it takes for him to be kind of, officially put in place and gone through the kind of the mechanisms, the increasing likelihood is that he might fuck up, or he might say something that Trump disagree with, and what Trump's like, oh, actually, I'm going to choose someone else now. Until he's sat in the seat, nothing's a sure thing anymore, right?
No, absolutely not. I mean, that opens up a whole can of worms because you then go, and I'm not saying this is a base case, but if Trump were to pull the Walsh nomination, then that means that Powell is going to carry on longer, which he obviously isn't going to want. But then does it mean that what happens then? Does he try and appoint one of the other governors to be chair? Well, you wouldn't rule it out. You seriously wouldn't rule it out.
This is why, part of our job as traders and whatnot is to try and make sure we have a plan for everything, no matter how unlikely. Have a game, game everything out. And all I'm saying, I'm not saying that Walsh's nomination is going to be pulled. All I'm saying is there's a lot of things that are still in motion. The longer this goes on, even if it's just in terms of percentage terms, even if it's gone from a 5% chance to a 10% chance, that's still a change in the percentage chance that he's going to have his nomination pulled. It's something you need to consider. What happens next? Because I'll give you a clue. If the headline hit, say Walsh comes out, does a statement, or something comes up from his past or something, and Trump goes, fuck it, he's not my nomination anymore. What is the market going to do? Now, it's your job as a trader or an analyst or whatever to at least have some kind of guess where you think it should go or where you think it should move. But, I haven't got a fucking clue, but I think it's definitely a good thought experiment to do if you've got to spare half an hour or something today.
Well, it almost makes war seem straightforward at that point. But I joke, but it does. That could be a proper mess if we go down that path. But there we are. We'll see what happens.
Well, I look forward to your note tomorrow to tell me what to do if that happens.
I get all the best jobs, don't I?
Yeah, absolutely. Well, Michael, on that, thank you so much as always, my dear friend. Listeners, thank you so much as usual. Myself and Michael really do appreciate you listening in. Hopefully you've put a smile on your face and a bit of value into your day. Keep it tight. Stay